crypto scams are not the blockchain's fault. Think of blockchain as like as the highway. It's just the road that cars travel on. If someone gets scammed, it's not the highway's fault.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Mark-Ian Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too. Welcome, everybody. This is the ADPI podcast here today for a topic I don't know that ADPI has ever covered, or maybe in this kind of depth, because we're doing a community podcast with our program director of the Multifamily Academy and cohorts, and one of our certified coaches, Seneca Peña Colazo, who are also big time blockchain, crypto, decentralized finance nerds. But don't fret. We're gonna break it down Barney style, as I always say. So get your crayons ready, get a piece of paper ready if you're really sitting down, writing down notes. We're gonna break this down. Okay. So hey, Tim, Seneca, if you don't mind just saying a quick hello, quick little background of what got you interested in this stuff. And then we're gonna dive into the topics as soon as we can.
Seneca, you go.
So hey everybody, Seneca here. I have been a crypto junkie since the bull run in 2021. I was exposed to it a little bit earlier. Actually, a buddy of mine told me about it right around kind of the first bull run in 2013. And by bull run, I mean when like crypto prices, specifically Bitcoin, like started to skyrocket. So when, kind of the COVID crisis happened in 2021 and the stock market tanked, I started and asked myself, like, how can I capitalize on this thing? So I started real estate and I started looking at crypto. And that's when I just went all in on both. Not a lot of sleep was happening. And that's when I started to research it, and really over that next 12 months got heavily involved in all aspects of it. So, and then obviously spreading the word to tell my buddies about it. Cause I want everybody to get in on this, cause I believe strongly that it is absolutely where we're going in the future.
Yeah. And I love that you said highlighted those real estate and crypto or blockchain, because I think that's what's going to be unique about this episode is we're all real estate investors. We're also blockchain enthusiasts, and we're going to show you all you listeners, why there is going to be a cross-pollination or a collaboration between these two industries. Tim, what's up?
Cool. Yeah, no, that's going to be a fun conversation. Thanks for the invitation. I spent about 15 and a half years in the Navy, and I got out and I also was helping, build and share my knowledge through the ADPI community from the very beginning. And so throughout my journey of investing and getting out of the Navy, I was like, man, I was in circles of people who were talking about it. So in 2018, that's when I kind of went from there's 5 phases of people learning about Bitcoin, and from skeptic to believer or maxi, right? So I was like a skeptic, but then I ended up doing a little bit of research, and then I went into my first investment in 2018 and kind of let that fizzle for a while. Wasn't really paying too much attention to it. I was really leaning into commercial and multifamily real estate and kind of helping people throughout the ADPI community learn about real estate and create their own financial freedom paths. But I always then I started dollar cost averaging in 2020, meaning every month I would kind of just dig up whatever coins in the couch or whatever fiat money I had available to just put as much as I can consistently into it. And I've been doing that for the last 5 years now. And I've also learned through that journey and surrounded myself with other people who are doing it. And there's so much opportunity in where the future is headed with the level of adoption with our new administration. And it's just it's looking really, really bright. And today, as we speak, I'm really excited because Bitcoin tanked. And right now it's a crazy buying opportunity. So I literally just smash bought over the past couple of days as much as I possibly could, because right now is a buying opportunity in my mind. But there's a lot of people out there that are thinking, wow, it's going to go to zero. People are freaking out. There's blood in the streets. But right now I'm excited because I'm buying stuff it's like Black Friday for Bitcoin right now. So But yeah, let's dive in, man. Let's get into it.
Yeah. Well, I think there's a tried and true investment mindset that you just highlighted. Like Warren Buffett always talks about, like, buy when people are fearful, right? And similarly, I saw the former CEO he tweeted, like, I don't know, years ago, and he was saying, guys, there's going to be come a day when everybody's going to be saying, "Oh my gosh, Bitcoin is crashing because it goes from 101,000 to 85,000." This is back when it was like probably 5 times less than it is now, right? And so he retweeted that and posted, "Guys, save this tweet. Someday Bitcoin's going to crash from 1 million to 850,000." And it's just funny, So let's just get something straight, though. Okay, Bitcoin is not a scam. Okay, so if you're listening to this and you think it's a scam, we're going to convince you otherwise, or that's going to be my goal. We on this podcast all love real estate, but because there's some amazing similarities. Ethereum, or most of the other top 50 layer one, we'll talk about that later, blockchains are not a Ponzi scheme. And the blockchain or crypto isn't some magic internet money that's going to disappear tomorrow. Okay. And, I think if you listen to the news these days, the whole thing is like, oh, it's like people who don't understand it's a big fraud. So today we're going to break that down, what the blockchain really is, how crypto works, and why the scams you may have not have heard are not because of the blockchain. Okay. So we're going to dive into that. So first things first, gents, let's talk about like why we're confident that, let's say, nobody's going to like steal our money overnight. I'm going to start off by just leveling like the educational playing field here. So no matter what level you're at when you're starting to listen to this, is giving everybody a little bit of an analogy. So I was a computer science IT major. I had to learn a little bit of cryptography. And back then I learned how to decrypt and encrypt things with private and public keys with large prime numbers and why it was so powerful. It blew my mind at the time, but really in the simplest form, if you want to understand how this works, think of it as an email address and your password, right? Or a handshake where the two parties are the only ones that know the secret. Well, did you guys have an aha moment, or is there some way you like to think about it? And how do you, I know, Tim, you're big on custody. Like, how do you guys start this conversation with somebody who's brand new?
Yeah. Oh, yeah.
Not your keys, not your coins. No, go ahead.
So I was going to say,
yeah.
The way I like to explain it, is, it all starts with Bitcoin and the blockchain, right? Which is literally just every transaction. And we call that a ledger. And the powerful thing about the blockchain itself cannot be hacked, right? Having said that, everything that attaches to it is potentially where there is a vulnerability, right? But even those things are getting more refined, more secure. So in the way that, let's say the blockchain works, and we're talking, and just talk Bitcoin, right? Keep it very simple and easy. Because it's a ledger of every transaction, there is a layer of security that allows people to add to that blockchain, right? So they have to go and you have to use these big computers that basically solve these passwords. And then by solving the password, they say you have the ability to include a new transaction on this accounting ledger. And that's how it's updated. And then the miners who have the ability to add that transaction get rewarded in Bitcoin. And right now they get like a little over 3, which is pretty significant, right? At about 100 grand, like you just made 300 grand for doing this, but they've been doing it since way back. So that is what kind of the blockchain is, and how like the largest amount of what I would say volume wise, when you talk about Bitcoin, that's kind of how that works. And the great thing and why people gravitate towards that is it doesn't include any banks. And I think it might be a good idea, Mark-Jan and Tim, to maybe talk a little bit about, why Bitcoin, why crypto, why are people like starting to do it?
Okay. So how about that? We're going to jump back to custody and owning your private keys here in a second. I know that, Tim, you have a lot on that. But because you kind of dove into the world of like, Bitcoin specifically, and maybe like the actual blockchain mining ism, let me just read something off. and why it's secure. So you said something, you said miners. So this is a cool thing about blockchain in my mind is, or at least Bitcoin was, it in many ways mirrors the real world. So there's people mining for it, which takes work, which is why it's called for many reasons, but it's called work. So there's people out there that every new layer makes it that much more impossible to get one layer down. And you can see through it, and it's just block by block by block. And as a reward, this is where the miner receives that Bitcoin. They get the block reward and transaction fees. But here's the catch. It requires a massive amount of electricity. And so the market, the way it works here is like, it's only worth it at a certain level. Like if it takes more to mine it, more electricity, because as it goes on, it gets harder and harder and harder, then it's going to require more electricity. So the value of the Bitcoin better be higher for people to want to do it in the first place, right? And so it has actual like physical encapsulated value. Oh, wow. People spent time, money, electricity to get this thing. So it actually does have that kind of value. Does that make sense? Do you guys think I explained that well enough?
Yeah, absolutely.
Yeah. I
So,
mean,
so there is something to it.
yeah, no. Essentially, the proof of work is not just for Bitcoin. There's other actual cryptos they use it, Litecoin, I think Dogecoin. But like the example is like, imagine like a huge Sudoku like competition where like thousands of people, it's like a race. The people are racing to solve this puzzle using a ton of energy. And the first one to solve it wins the reward. And they get like to add to the next page of the book or another blockchain, another chain in the block. And so powerful computers like these miners like are literally competing to solve these like very complex math problems. And then they get the first one to solve it, like validates the transaction and they earn Bitcoin rewards. And so that's what mining is. And that's why I have allocated some of my investment, my crypto investment to Bitcoin minings. I never owned my own miner, but I did a bunch of research on the best mining companies and different funds, just like you can invest in a syndication where people have, are raising capital to own and operate apartment complexes. There's also people who have like a whole warehouse full of these miners who like are leveraging tons of energy and they're offering investors returns in Bitcoin, in the form of Bitcoin from those rewards. So yeah, that's just another way I wanted to kind of explain
one
it.
other, I think.
Oh, I love the Sudoku puzzle.
Here's one other, I think,
Sorry, go
important
ahead, Seneca.
distinction. So you kind of, in my mind, have like two kind of classes for cryptocurrency, right? So you have cryptocurrency that is like a currency, right? That is very similar to like, Forex, like your foreign exchange market where you have all the currencies that, you buy and sell and trade against each other. And then you have the cryptocurrencies that are used to do stuff, right? In like what we call real use cases, right? That have utilities. And what happens is, and they're as it's evolved, you have all of these things start to kind of combine for each other. But, you have your stuff like Bitcoin that is used as a reserve. It doesn't necessarily do anything for you. It's just like, a hunk of gold, a hunk of diamonds, or whatever it is.
It's like gold. You're not going to walk around with gold.
And then you have the other class of cryptocurrencies that are used to facilitate and process transactions on that chain. Right? So what do I mean by that? You have cryptocurrencies, and especially as we get into the decentralized finance world, right? So this is just money, and then you've got crypto that enables you to do a whole bunch of things, also securely, independently, in a decentralized manner that's not controlled by any one entity. It's kind of fight the man. All crypto is like fight the man. We're all in it. We're just going to, do it ourselves and secure ourselves. So for these, like what we call real use case, types of cryptocurrencies that do stuff, and I'm sure we'll go through examples of that too. They use their cryptocurrencies as what we call gas, right? To process the transactions. So you have to process all these transactions. And if you want a higher priority to get your transaction processed faster, you have to use what's called the native, currency of this chain. So you mentioned Ethereum, Mark-Jan. Ethereum is probably the largest of all of the other networks where all these like real use case type coins are kind of stored. And then in order to use, the networks on or the coins on the Ethereum network, you have to kind of pay to play, right? So I created my own coin. My coin does this cool thing where it enables, real world supply, transaction visibility, like, VeChain or whatever. So I pay a certain amount of VeChain coin in order to process my transaction in the Ethereum network. And then Ethereum also says, hey, if you want to use my network, you got to pay to play too. So I'm going to take a little bit of a transaction fee to, process your network. Now, Ethereum's the biggest. There are others that are also growing as it gets useful. But I thought that was an important distinction to say, hey, there's like the coin stuff, and then there's the we do stuff types of cryptocurrency.
Right. I think oftentimes I hear it called like store of value versus utility, right? So Bitcoin is now very renowned for being mostly a store of value. If you try to send Bitcoin because of, and think about this, going back to what the miners need to do. When you send Bitcoin from one person to another, the only way anybody's going to be certain that that transaction did happen, that now the other person actually owns that value, is if there's millions of people around the world that validate it based off a very complex math problem that took a lot of energy to do, right? That's why it's so secure. That's why people are like, okay, I know that this just happened. However, because that's what it requires, Bitcoin also costs a lot of money to do the transaction because you're basically having to pay the fees to reward part of the transaction fees for the miners, because they get paid from the block that gets formed, where on that block on the ledger will be written, Seneca transferred money to Tim, right? So you have to reward them in order to want to spend the electricity to verify your transaction and to put another block on the chain, right? So that is required. So that's why what ended up happening by the nature of how it's built, since Bitcoin is so expensive, they started just saying, well, this is the first one. It has the best name. It is the brand of all crypto. This is the store of value. This is like gold. Like you're not going to go walk around with a block of gold to the market. It's difficult to find utility in it as a payment method. It's good to just think of it as gold that you can collateralize to do other things. Whereas like Ethereum, which I'm going to dog on Ethereum all day, every day. I hate it with a passion because it sucks with the transaction fees. And it's, hey, I'm happy it would revolutionize what's called smart contracts, and it gave a lot of utility. But then there's blockchains like Algorand that just destroy it, but people just don't know about it. So, but yeah, so there's the utility, because there's blockchains that they cost 1/100th of a penny to do a transaction and to verify it immutably. And so those, it's a lot easier to like send money to, your grandma in a different country in a second almost. Let's just circle back real quick to the custody stuff. And then I want to talk about maybe comparing it to real estate here in a second. Tim, how do you protect your money?
Dude, I love that. And I want to caveat this because, you drove home something that was really important that I want to kind of like drive home even more. Like you talk about how every transaction is permanent and transparent. No one can secretly like just change records, right? Everything is transparent. And this is another reason like crypto scams are not the blockchain's fault. Think of blockchain as the highway. It's just the road that cars travel on. If someone gets scammed, it's not the highway's fault. It's the driver or somebody.
The guy who drove on it. Yeah.
So scammers are exploiting human mistakes. They're not exploiting the blockchain technology. So if someone like emails you pretending to be your bank and you send them money, it's not the bank's fault. It's fraud. It's like your fault for like, going and being vulnerable for that. So in crypto, scammers trick people into sending like Bitcoin or revealing their private keys. Like the blockchain just records what happens. It doesn't like decide who wins or who gets it, It's actually way more secure than banks. That's why one of the biggest reasons why I even like was attracted to Bitcoin is decentralized finance. I don't have to go into a bank and request that I pull out my own hard-earned money from the bank because I own the keys and I have custody of my Bitcoin. And so
Right.
it doesn't, like, the weak points are exchanges. Like if you buy Bitcoin, keeping it on the exchange, they have your keys, they have your coins, right? If you
FTX.
the exchange and you have it in a wallet, that means you have more custody of it. And there's cold and hot wallets. But those human errors and not having proper self custody is where those scams or fraud actually happen. And so I look to kind of dive
Can I
into
give you one more analogy?
what's that?
Sorry, can I give one more analogy?
Yes.
Because
Yeah, go
I
ahead.
know you got a lot more to say.
Yeah.
I read about it where it's like people, because people always say Ponzi scheme when it comes to this stuff, and it's like, yeah, well, there's a lot of Ponzi schemes that used Microsoft Excel, but you don't blame Microsoft Excel for the Ponzi scheme. In this case, truly, because it's like software. I think that's also another good analogy. But yeah, man, no, you're spot on. Like the blockchain itself, it's the software that people build to use the blockchain that might have an exploit, or it's the people that trick you to giving you their keys that are exploiting you. It's not the blockchain.
Yeah. So the keys to self custody, like, self custody simply means that you have full control over your cryptocurrency instead of relying on a third party like a bank, or in crypto terms, like an exchange like Coinbase or Binance or anywhere you could buy and trade cryptocurrency. It's like keeping cash in a safe that you have custody of, that you have the keys for, instead of just like in a bank that somebody else completely controls. Right. So the three main kind of keys to self custody is that you have a private key. Think of a private key like a password to your digital safe. If you lose that, you lose access to your crypto forever. If someone else gets it, they can actually steal your crypto. So again, that's human error. It's more responsibility, but you actually protect it and it's yours. But it does require more responsibility. And with that, meaning use a secure wallet, either a hot wallet that is software, like it's actually connected to the internet. Some of those are like MetaMask or Trust Wallet. They're easy to use, but they're more vulnerable to hacks because it's actually exposed to the internet, right? But a
It's
cold
happened to
wallet,
me.
what's that?
That's happened to me. I had a hot wallet. Fortunately, I moved my assets off of it before it happened, just serendipitously. But
Wow. Yeah, hard lesson learned. And like, again, I hope you're learning from our mistakes as well. We all have scar tissue because we've been in it, and we've had to grow through the volatility as well of all this stuff. But custody is like the key to not getting it stolen, not being exposing yourself to fraud. And so you got the hot wallet that Markian said he was almost vulnerable to attack because it's more exposed. You're on the internet, But a cold wallet is like a hardware wallet. It's a physical device that Seneca is holding up that looks
Trezor.
like a
This
ledger.
is a treasure.
A
Yeah,
treasure
Mark
or
Young's got the
ledger?
ledger.
Trezor. Yeah. I also have a ledger, but I also use a different one called the Arculus wallet. That's like a American Express, basically credit card, like a platinum credit card. That's exactly what it looks like. And I just tap it to the back of my phone and I'm able to access it, but it's not exposed to the internet. For these, it's much safer from hackers. When you're setting up your wallet, you get like a 12 to 24 word recovery phrase, also called like a seed phrase. This is like your master key, and whoever has access to it has access to your crypto. So you cannot put it in a note on your iPhone or in an email or anywhere on the computer that has access to the internet. Do not put your seed phrase or your recovery phrase on the internet whatsoever. You got to store it offline, like writing it on a piece of paper in a safe. And a lot of people have it literally stamped on a metal plate. There's companies that offer you could
I
do this
scratched
for
it
you.
on a metal, but
Yeah, dude. Because if a fire happens and it's a piece of paper, I lost my seed phrase. I lost all my coins.
Yeah.
Like, so having it in a steel plate and stamping it, or having it somehow engraved and then putting it in a fireproof safe, is one of the best things you could do. Just never store it in emails, notes, or take pictures of it and keep it in your phone. You can't do that. So the last thing is like self-custody versus keeping crypto on an exchange. I noticed, like, I shared, when you purchase crypto, you have to purchase it from an exchange like Coinbase, Binance,
Crypto.com,
Swan. There's a bunch of different ones. Dude, it's crypto.com. There's a lot of different ones, and it's easier, but you don't control your crypto. They own your keys if you keep it, because you have to create a wallet and they keep it on their, on their actual exchange in a wallet. And if they have the keys to your wallet, they have the keys to your coins. Like, they own your coins. So you got to get it off, their exchange, and it can get hacked. And
Yeah.
if something like many
They
companies
can
have
get
gone
hacked
down under,
because it's a
like,
software.
it's 100%, and you could definitely lose access. So the difference between exchange and then self custody is the most secure, but like I said, requires responsibility. If you lose your private key or seed phrase, no one can recover your funds for you. Not your keys, not your coins. Just that's the last point I just wanted to drive home.
Not your keys, not your coins. And so for this one specifically, like, I literally need to approve the transaction with a password on this thing that I need to physically hold next to a computer or a phone where a transaction is not going to go through. So that's what I like. Like, I have the majority of mine stored on here so that there's no way, unless somebody comes to my house with a pipe and says, I'm going to beat you up. Like, that I guess that's possible. But for the most part, like, I need to have a physical action that I do to make it happen. Thank you for that. So you got two of them. You got one,
two,
Seneca.
yeah.
I got one. As you're listening to this, yeah. Oh, you got two. Like, obviously, there's a reason why we use cold storage, because we've been around. We saw a lot of, because, like, if you start dabbling in some of the other things other than just storing it somewhere, every action you do starts potentially opening up an angle where somebody, through the software that you're interacting with, could hack into your stuff. Right. And so it's like, FTX, Coinbase, whatever. Also, you don't want them to have like a Mary Poppins moment where there's a running of the bank and all of a sudden they're lending it out somewhere else. And now they're like, no, we're going to freeze your assets. We can't send it back. Right. So this is why now it might seem like, okay, it's more of a pain in the butt. Here's what I'll say. If you're just getting started, there's nothing wrong with just starting a Coinbase account, learning about the stuff. They got this great little education stuff that rewards you there. Just learn the basics, get a feel for it. And that's that. So, and then when you're like, you start making you start really putting investment into it, at a higher level, that's when you can start investing in getting some of these cold storages and learning about it further. Any more to add on, like, just storing practices, anything like that, before we move to like the real estate kind of like collaboration or marriage of?
Yeah. What I would say.
Yeah.
Good.
Good.
No, you're
Yeah.
you,
So
Seneca. Go ahead, man.
there's also the downside of it, right? If you lose your keys, that's it. Like, there's no recovering. There is actually a growing chunk of Bitcoin that is unavailable because people have lost it. There's a dude, I don't know if you guys know the story, like the dude that has like, I think it's like 200 Bitcoins or whatever in London, and he threw his password away. And I think you get, 16 times to try and put in the right password. So he's like pumped it out and farmed it out to folks to like look through dumpsters in all of England to try and, recover like where he kept his passwords.
Yeah. Now he's in
Like,
debt.
it's crazy with the promise of, hey, if you get this back for me, it's going to be worth $200 million in the next 10 years. Right. Like, so there is the downside of it. And keeping like hard data files and copies, forgetting where you put it and all that other stuff. So just know that that's, people are going to be people. That's absolutely it. So you have the physical, risks, and then you have the risks of keeping in like a hot wallet of like, compromising yourself. So it's not guaranteed. It's not easy. Just be aware of what you do and make sure you take the appropriate counter, measures to ensure your own safety.
Yeah. And I will say, like, there's also risks in just keeping your money in a bank too. Right. So it's kind of, but you're right. And so it's just whatever you are, I would say whatever you are better at and focus your attention on, continuing to be a student of your craft in that thing, like the more security you're going to create, right? You're going to mitigate your own risk by being smart on it, just like with real estate. So speaking of real estate, so when I read the book, The Bitcoin Standard, that kind of started explaining to me how I think about money
overall. And actually, when I understood how, gosh, I can't remember the guy's name off the top of my head, but look it up, Bitcoin Standard. It's a great book. I listened to the audiobook. I started to understand what I think he really, I think, narrowed in on actually why some currencies went away, like the tulips back in like whatever the 1400s or whatever, whenever that was, or some currencies staying strong and has withstood the test of time. And he brings it back to like a fairly simple formula, which it just blew my mind because of how much it made sense. But it's grounded in the very simple principle that I'm sure everybody's heard is like supply and demand, right? I oftentimes make this analogy with people. I'm like, look, if you have a rental property and you have a dollar bill or dollar bills that can buy the rental property, if those dollar bills lose value, right, that means you're going to need more of them to buy the rental property. So you got to understand that like, the value can be lost with the dollars because maybe there's more of them now, or because people want it less. And so a lot of times when we're thinking about like, oh, we see something go up in price or something go down in price, we're like, oh, the value went up or the value went down. Maybe it stood exactly where it was, but relative to the currency that you're trading for, maybe that currency lost or gained value. And so now the next step was he coined it like stock to flow ratio. Actually, I don't know if he coined this, but he talked about it. He's like, you have a certain amount of stock, right? A certain amount of supply, and then there's the flow. So how much is getting added to it every single, whatever the time period is. As you can imagine with the real estate, there's a certain amount of stock of homes to live in. And then there's a certain flow of the new homes being built or apartment complexes, right? And so real estate has a very high stock to flow ratio. It's very valuable because people are probably multiplying faster than that flow is coming in, or it's staying comparable. And that's what's kind of keeping the demand where it needs to be to match the supply. Bitcoin is wild because there's never going to be more than 21 million, period. So not only is the flow very slow because it's getting harder and harder and it's taking longer to get these new Bitcoins, but also there's a limit. It's going to end. And that's what is driving a lot of this almost insanity in the pricing. And I don't know, like to me, that is probably the most important piece to understand. Like why, like people look at this, like, why is it 100,000? Well, it's because there's like a limited amount. It's never going to go, there's never going to be more. And so that's why, I don't know, does that real estate analogy kind of make sense? What do you guys think?
Yeah, I mean, I 100% agree. So you have this limited commodity, right? And that's why we value like gold and diamond and all these other things, right? Like there's a limited amount around. And not only is there a limited amount, first of all, you don't have access to all of it yet, right? You only have access to less and less and less, like every 4 years, right? You go through this cycle. It's called the halving, and the rewards get less and less and less, and you're losing it. The amount that is being lost because of people like, again, dying, passing on, don't pass it on, all that stuff,
Right.
like that's growing too. So that's gonna like spike the price up. So I mean, understanding that and why it's so valuable and how you can see it's going to increasingly become that store of value. I mean, I think it's very relevant. And I want to say ARK Invest with Kathy Woods. If you know about her, she's kind of like a female Warren Buffett. They put out a paper just fairly recently that says Bitcoin is moving towards becoming a risk loss asset, meaning it is now being viewed more of as a bond, right? Or a very super low risk type asset, as opposed to, what we thought of crypto as this like Wild West, highly speculative, high payoff kind of thing. So sentiment around it has absolutely changed, I think, in the past 2 years, especially, even really the last year, it's taken off.
Yeah. So it is becoming more secure, more traditionalized, almost like real estate and bonds
Yeah, absolutely.
in terms of its value.
Yeah. And that brings me to like adoption. I think people see the price of Bitcoin and they're like, well, I must be way too late, it's too expensive. First of all, you could buy a fraction of a fraction of a fraction of a Bitcoin. You could literally invest $10 right now. And the key, like you literally just work your way to owning one Bitcoin, your life will be changed, completely. I really believe that in the next 10 years, 100%, you will have a lot more freedom than you would if you didn't and own one Bitcoin. But like, where are we now in terms of like adoption? Like, think of crypto adoption, like where the internet was in the early 2000s. Like in the early 2000s, some people are actually using it. Big businesses were getting in, but like most of the world didn't understand what its full potential was, right? So where I think we are now, it's called like the early majority phase. We're past like the experimental stage. Like Bitcoin in 2010 was like the internet in like 1995, but mass adoption is just beginning stuff. Like, so now if you guys didn't realize, big players are buying in, like BlackRock, Fidelity, major banks have already launched and are continue to launch Bitcoin ETFs, making it easier for everybody to literally invest in Bitcoin. And they're putting billions worth of Bitcoin on their balance sheets. Governments, like some countries have already integrated Bitcoin into their financial systems. The Bitcoin strategic reserve, I don't even know if we'll have time to dive into that, but like each state is going to eventually have its own strategic reserve for Bitcoin. Governments around the world have already done it. El Salvador did it back in like 2022. Like they were the first one to kind of get it going.
Brilliant.
But
Brilliant.
we're maybe like 20 to 25% of the US actually holds Bitcoin. So if you think we are like too late because it's too expensive and like you missed the boat, not at all. Like most people, you would still be considered like an innovator if you bought today. And even I think through the rest of this year, you would be still considered an innovator if you just hold it, never let it go, don't ever sell it, continue to dollar cost average every month, like as much as you can without going broke. Money, of course, that you would be willing to lose and part ways with, especially until you get educated. But I just want to make sure like you're not late, because institutions like these large institutions are just coming in. Less than 5% of the world actively uses Bitcoin. And like compared to like 85% of the world that uses the internet. And like that adoption curve is like, we're in the very early stage. And in the next maybe 10 years, we're going to be kind of at the peak where like everybody's going to understand like how to like the concept of Bitcoin that we're trying to convey what we know right now, but we're all still learning and we're on our own journeys as well. So just want to drive home. It's not too late. You can definitely get in and it's still very early.
I think that is a very important point. However, what I will say is if you're looking to make money off of this, right? If that's your main driver, short term, there's a different way you have to look at this. Like Bitcoin's probably not going to 10x your money in a year.
Well,
okay. It is.
Sure.
Well, okay.
Yeah,
Anything's possible.
40% on average since the inception. But even if
I'm talking 1,000% increase, right?
Yeah.
Like it's not going to 10x. Whereas like you could potentially buy some, token on one of the other layer 1 blockchains that it could be a meme coin. Like I got a meme coin that 10x'd in like a week, right? It could be just a joke. It could be Doge. It's going to blow up because the tokens were only like a couple of pennies or less. And then it blew up to 50 cents or $1, right? So if you're looking to make money, which that's not really what this show's about right now, but just so you know, like Bitcoin's probably not going to be just like real estate isn't a get rich quick scheme. Like if you got into Bitcoin a long time ago, if you're looking to like have that strong backbone, like Tim was saying, or I think Seneca, you were saying, like it's becoming like the less risky thing. It's becoming, and because of what Tim said, the adoption, like there's more trust in it now. It's probably just going to continue growing over time. It's going to have its peaks and valleys, but long term, it's probably going to continue growing in value, right? I know I have sometimes people come to me and they're like, "Oh yeah, I mean, like I'm looking at this one thing. It looks like XRP, like looks so promising. It's like $1 or $2 right now. I mean, and Bitcoin's $10,000 or $100,000, like, and I'm like, no. Like you can't think, oh, because XRP is like
second in popularity or third in popularity to Bitcoin, that it is someday going to have $100,000 or a value. It's literally, I think with that one, it's probably impossible, because in order for that to happen, right, that means it's more than all the value in the world, then you're crazy to think that it's ever going to be worth that, right? So with Bitcoin, again, when you're looking at $100,000 value per coin, but there's only, I don't know how many in circulation, right? Like less than 21 million, then that kind of makes sense. That's what creates that market cap. That's why people are like, oh yeah, it's a $2 trillion, market cap. If you think of it as the value of a company, it's basically worth like what Nvidia or Apple is, right? But if you, so you got to look at what's possible with, like, I don't remember, with XRP, it's what, like 100 billion or whatever, 20 billion. I don't know right off the top of my head, tokens available. So if you want that to be 100,000, I mean, do the math. That's preposterous. It's never going to get to 100,000, right? Famous
Okay.
words, never say never, whatever. But like, that's why like I'm heavily invested in Algorand.
I'll go.
It's had a terrible couple of years, but so have a lot of them. But I like it because of the tech. Its utility is so insane. And it's capped at 10 billion, which makes it actually a pretty normal value. Like even if it becomes like $100 billion, or let's say a $10 billion market cap, like it's worth $10 billion. That means each one is worth $1. And that's like easy to wrap our heads around. It's hard to wrap our head around, like, oh yeah, let me pay a Bitcoin for that, because it's $100,000 in fiat currency. So anyway, I digress, but I guess I just wanted to talk
Yeah.
about that.
If I could jump on
Yes, there's other
the
currencies. Yeah.
adoption. So there's two things I kind of want to talk. Well, one is I don't think that people realize like how fully adopted this is, and kind of a little crystal ball on where it's going. Right. So you've got,
Right.
I think the adoption and MicroStrategy and Mike Saylor, he's got like $22 billion worth of Bitcoin for this company. Like he went all in on it. Right. And, massive company.
Yeah.
President Trump released his own crypto coin in January, Trump coin and Melania coin, that immediately jumped to like tens of millions of dollars in market cap for those two coins. It's a straight meme coin. Yeah.
Billions.
Not billions, but millions, right? It's a straight meme coin.
No, billions. Pretty sure.
Yeah, but I think it's regressed back down.
Oh yeah, it's
So-
regressed now.
so-
but yeah, I mean, like, that
Yeah.
thing
So
was
it's
wild.
like a coin that didn't, it's trying to be a store of value. I mean, that's part of the wild west of it. Like he gets a percentage of it based on like transaction fees and all that stuff that go on. But people just want to invest in it because they think it's gonna, boom. And then, to give you the scale of what
right.
crypto is, you've got $2.9 trillion of volume into cryptocurrency. Massive. You also
Yeah.
have like 11 million, almost 12 million different cryptocurrency coins, right? Because, from 2018 on, you could start to just make your own coin, right? And now the tech has become much easier to do it because everyone's trying to be the next kind of meme coin. So you have like all of that to try and navigate through. And that's where, if you're like a day trader and disciplined, you can do like technical analysis and, you like volatility because you can buy or sell based on that volatility, and people do make money on it. Absolutely. But there's not really use cases. Yeah.
Just like
absolutely.
stocks.
And then you've got, all the countries that are in it. And this is where I think it gets super interesting, because you have like 8 countries that right now recognize, it as legal tender. Dubai, it's like the crypto hub of the universe, right? Where everybody can buy and trade in there. Argentina buys up Bitcoin using it as a reserve. And then you still have the mining hubs that are out there, right? And then you see how it's, the EU is focusing on regulation and institutional adoption. Latin America and African countries are using it to fight inflation and their own banking issues that they're having, right? With the core purpose of it. You've got, Asia is out there as a hub for, your crypto businesses and innovation. But then you have China, right? Which I think is like kind of leading the charge of where I personally think it could be a little dark, but of using it as a form of control, saying, I will, centralize this decentralized stuff. They've moved towards, their own digital currency, right? The yuan, the digital yuan. And there's like 4 or 5 other countries that are kind of moving that. US is still looking at it. And then they have, to have complete oversight because what's blockchain? Everybody can see every transaction, right? But now China's layered it in.
Yeah. Everything you ever
Now
bought.
China's layered
Now
it
see.
in where they can
Yeah.
actually control it a little bit. And then they have like your reputation points and stuff, right? And how good of a social, person you are
Oh my
and how they're
gosh. Yeah.
engineering that. So that's kind of like the dark side of where it can go to. The US is trying to figure it out. Everybody knows kind of we're going towards digital currencies, right? When we did quantitative easing to or just printed more money, we didn't actually print more money. We just like hit enter and return and just pump more digital, currency into the system, right?
It's more zeros in all the
Yeah,
bank accounts all of a
exactly.
sudden. Yeah.
So that's where we're going, right? You've got 130 countries right now that are exploring these, what are called these central billing digital currencies, CBDCs, right? And then by, in the next 10 years or less, the likelihood that there will be live currencies is super high, right? And then that doesn't get into, how we're and that's just as a store of currency. The kind of other piece where I wanted to go with it is the actual use case stuff, right? And how I think that is going to be the thing that drives the use of,
Let's talk about
let's
use
go
case.
right there.
Tim, what is your favorite that you know of, like that you're excited about, maybe use case out there for any kind of blockchain? Like, how is it used? Use case meaning, like, how does it transcend into what we think of as the real world?
Yeah. So, I don't know if we're going to have time to kind of go through the phases of like individual adoption and kind of like how you go from a skeptic to like a maxi or like a missionary type person where you're sharing and educating people, kind of like we are right now. But for me, throughout that process, I, went off and I had a handful of alternative coins as I was educating myself. And I literally put all of that into Bitcoin. I went away from all my alternative coins and parked it all into Bitcoin. And I think one of the coolest things you could do, because we're on a real estate podcast, is that instead of taking US dollars and investing it in Bitcoin, I like to park it into or investing it into real estate. I like to take my US dollars, my fiat currency, park it into Bitcoin, and then leverage against my Bitcoin that still grows to buy real estate, to buy cash flowing real estate. So
Okay. Okay.
yeah, to me, that's kind of, probably the one thing I would say, especially because we're real estate investors and like people, are at the point there are real estate investors out there that are leveraging Bitcoin and they're tokenizing real estate, digital shares like we kind of dipped into a little bit. And think about what sellers want more than anything when they're selling an asset, whether it's a single family home or a 1,000 unit apartment portfolio. They want a quick transaction. They want to know that it's transparent, like there's not a lot of fraud involved. There can't be any mistakes. Dude, this is a global investment. Crypto removes the barriers, letting investors buy property anywhere in the world without dealing with like any kind of exchange or government restrictions or banks.
Boom. Boom. Let's dig into that some more.
Let's go.
So
Mhm.
there's a company right now called
Mhm.
Proppy.
Real tea as
Actually,
well. Yep.
I'm trying to remember the founder. Anyways, Proppy, right? I think they actually had an instance on Algorand, but they're primarily on Ethereum. And so they are essentially a blockchain title company. Okay. I think they have more to, I don't know a whole lot about them, but picture this. You don't need attorneys spending billable hours verifying stuff. You don't need to do surveys. You don't, like, literally, once it's on the blockchain, everybody knows, like, oh yeah, Tim Kelly 100% owns this property. And all we have to do is spend, let's say if it's on Algorand, 1/100th of a penny to now immutably say that Seneca owns this. What in the world? Like, there's no, you don't, like, there, all other guesswork is out of it. Everybody who has access to the ledger can see that it's true. Like, that is bananas. And that's, so you were saying, like, what does a seller want? Seller wants to know, or sorry, the buyer wants to know that the seller actually owns the property so they don't have issues later. And the seller and the buyer don't want too many random fees, and they just want it to happen as soon as possible. That's what blockchain allows. It's incredible. And also, I think a lot of times people are like looking at real estate and Bitcoin. I was like, well, should I invest in that or should I invest in that? I'm like, both, because they're completely separate. It's not, there's no, like, for example, I'm going to continue investing in real estate because guess what? I don't care what people use for currency in the future. They're still going to pay me rent. If everybody's using Bitcoin, they're going to pay me
Yeah.
Bitcoin for that rent, so it doesn't matter. They still have to exchange, the value still has to exchange whatever the currency is. But real estate, I know everybody's always for forever, and unless we become all angels and ghosts and whatever, we'll always need a place to live.
Yeah. Yeah. See,
So
let's talk about just crypto and real estate.
but
So Roofstock right now accepts Bitcoin as a form of payment, right? You hit on, Propy and Realty that have smart contracts that tokenize that whole process, right? Usually do it on ETH. Now they're starting to be able to do it on Polkadot and Cosmos, right? And they can do it cross chain, right? So now you can get into, well, I don't have that much Bitcoin. I have this other stuff. So let me pay for it over here and then work the finance piece to start to get it. You've got crypto mortgages, right? So there's a company, Milo and Leadon, I think it is, where they will offer you a 30-year mortgage if you have, 400K in what are called stable coins, right? And offer you a mortgage, right? You can get approved right now. It takes, put 10% down. They're offering you a rate 9.5%.
so forget your
Right here.
DTI.
That's
You got
it.
400K
That's
in
it.
stable coins.
And
Boom,
and
you're
just to say, we
approved.
talk stablecoin. Quick aside, because you have all these currencies that have different values, right? In order to kind of stabilize the system and have a coin or some kind of medium where everyone can baseline relative value to, right? So for fiat currency, it's all baseline against the dollar. In the crypto world, we baseline it against stable coins. And these are coins that are actually backed by real US assets, gold, cash, bonds, stuff like that.
Gold,
Yeah, absolutely.
dollars.
There are a few different stable coins that are out there, but just to know, it's like you have to have something like that in order to, kind of help normalize and make sure we're getting equal exchanges of value on it. So stable coins, they're big. So now you've got banking institutions that can come in and do it. You love Algorand. El Salvador uses Algo and the blockchain for their land registry stuff, right? They use it to instead of going to, your deed and titling offices in your county and stuff, like the state can control it all right there. And we're not even getting into like Decentraland, right? And the virtual stuff where Nike, Adidas, JP Morgan, they've all gone in and bought plots because everyone's like, oh, well, are we going to do like, I don't know if you guys have seen Ready Player One. Like we're going to go into a world where we just throw on our gear and now we got to get into like this new world and we're going to start to interact there. Meta was throwing out, the campuses where everyone's engaging in these virtual worlds. So buying up property there, right? Tim, you said Lofty AI, or I'm sorry, you said the fractional piece. Lofty AI right now acts as a REIT, like the real estate investment trust there, where much less cumbersome, I can buy $10 worth of real estate right now through the Lofty AI guys. And again, because the smart contracts and everything's immutable, like that's just us.
On Algorand.
That's a small chunk of some of the use cases of what we can do. I mean, I think it'll be stuff like gaming is what's going to, help, I think, spread it more widely across, especially the younger generations, where they introduce like NFTs, which is non-fungible tokens, right? So it's like, hey, you have this thing that I know it's yours. This is like your little tag or whatever. And now you own this, where you can buy equipment from like Call of Duty and then be able to go play it in whatever other game you want, I don't know. I don't really game, so I couldn't tell you that much, but like, so those sorts of things that can, start to make it permeate in common, mainstream culture and be like, oh, this is powered by like crypto and the crypto technology. Like that's why I get excited about it.
Yeah. All the things that we think of that I think we forget a lot of times, like what things we rely on proof for, but like train tickets, plane tickets. People, whenever somebody asks you for your ID, it's because they're trying to make sure that you own it. And that's imperfect, right? So I think TravelX has sold like millions of plane tickets already on the Algorand blockchain. Sorry, I'm not like shilling Elgrand. Maybe I am, but like, yeah,
I want to give tools and like next steps for people who are
yeah.
like,
Let's do
okay,
that.
now this all makes sense, but what's in it for me? What is the next
Go
thing?
for
I
it.
want to make sure everybody understands like none of this was financial advice.
Yes.
Okay. Please
Ooh,
do
there you
your,
go.
please do your own research. Like I want to provide like a handful of resources, podcasts. Markian already, mentioned the Bitcoin Standard, one of the best books you could kind of to wrap your brain around that. And like, just because you have to do your own research, you have to like, don't try to time the market because of the volatility. Just don't pay attention to daily price. If you want to get involved, like dollar cost average, like every single month or every single week, put a little bit in there and just kind of roll with it. But like practice self custody with a small amount
Yeah.
before going all in. Don't let it linger there on the exchanges. Like practice using, like we talked about, a cold storage wallet. Get a couple YouTube videos going about them, learn and choose one and learn and understand how to use it with like, just transfer it from do like a $10 transfer from like the Coinbase or wherever you buy your Bitcoin to your wallet and be like, wow, this was actually easier than I thought it was. Like, and then you could start kind of just giving yourself confidence, because an educated investor is a confident investor, just like in real estate. You're not going to go take action and go invest 50K, 100K, or like lean in to be a general partner on a syndication unless you're educated. So you got to educate yourself before you kind of, move forward
Yes,
and
sir.
take action. So I want to highlight, I remember I went through the Bitcoin magazine. They host a Bitcoin conference like all over the world. They're like constantly happening. If you subscribe to their newsletter, they literally do like 21 days of Bitcoin. And like I did this like
Love
4 years
that.
ago when I was first getting in. It's like they trickle like more and more lessons of why, and they help you get educated in a very simple format. One of my favorite podcasts about all this stuff is the Pomp podcast with Anthony Pompliano. Definitely, like I literally just did another deep dive with him like last night in one of his YouTube, and he explained why this is like, we're not crashing, like this is the time to buy. And Robert Breedlove is another person that I follow. He's got a great YouTube channel, like What is Money? And obviously Michael Saylor is MicroStrategy
Yeah.
now. Strategy, he's the one that Seneca said earlier owns like 200,000 Bitcoin. He's putting billions of dollars into Bitcoin through his company. And you could also invest in MicroStrategy or strategy right now as an ETF. But obviously spot Bitcoin is better, just owning Bitcoin. But he's an advocate. Obviously he's a missionary. He likes to speak and educate. He's always on stages talking about it. So Michael Saylor, Anthony Pompliano, Robert Breedlove, read the Bitcoin Standard, and just like kind of just educate yourself and learn about this stuff, and start small. Don't try to time the market, and practice self custody with small amounts.
Thank you for breaking
Yeah.
that down. I think that's great,
Can I
great,
throw out
great
my
advice.
3 sources, I think, to get people started? So
Sure.
YouTube
Go
channels,
for it.
right? Like I like those because it's a little bit more consumable. You read the books and all that other stuff, but I like pictures and all the other stuff and folks walking me through stuff. Coin Bureau, you'll see it's like this British dude that goes out there. I think in terms of quality of content, analysis, reports, all that stuff. You can subscribe to their Telegram channel and get the updates of like what's going on, what coins are popping, big stuff that's happening in there is one of the top, I think, quality, kind of reliable, trustworthy in my mind, sources to go. I liked Finematics, Fine Matics, in terms of, explaining some of the more, how some of the decentralized finance stuff works, and get into that. And then another one is DeFi Dad. Again, like super
DeFi
super
Dad.
Barney, simple, like this is what these different things are that make up decentralized finances, and like the 100 million different use cases that are out there. So if you're going to just start watching stuff, like start in those 3 areas, absolutely read the books. But, I think people will go and gravitate towards that a lot as well.
Awesome. Gents, you have been a wealth of knowledge. Thank you so much for just sharing your perspective, your opinions on this. I think you all have cemented for our listeners the fact that Bitcoin is not going away. Blockchain is not going away. This is not a Ponzi scheme.
This is something similar to AI. Everybody should get smart on. It doesn't mean, as they say in the DeFi space, ape into something, but it does mean you got to like, you are going to feel more secure about your future the more you learn about this. And you don't have to like do some of like I just dive into things sometimes and make a bunch of mistakes. Yes, I learn and I learn very fast by doing that, but you can take it slow, read the books, watch the YouTube channels, and figure out how you want to weave that into your own personal financial strategy. Because it's not about diversifying, it's about having a strategy. So thank you, ADPI. Thank you, Tim and Seneca. Really appreciate it. If you guys have any parting words, let me know. Um,
Yeah,
we
feel
good?
free to reach out. I'm happy to chat on that stuff. I love talking about it. I even attempted to put some content out there on some of my socials and TikTok and stuff like that. So you can always check out my stuff at the militaryinvestor.info. And happy to be on here for sure. Thanks.
Nice.
Awesome. And Tim, obviously everybody can find you, both of you guys, in the ADPI space, in our Facebook group, in ADPI campus. Tim's also like on the education team. So he's on our website if you guys are looking for Tim. Anyway, thank you so much.
Thanks.
All right,
Yeah,
guys. Take
that's
care.
fun.
This is the ADPI podcast. Please remember to like and subscribe or whatever the cool kids say. Okay. If it helps us on our mission of impacting 3 million military families in the next 10 years. And, or just share it with somebody, right? Okay. Thank you so much again. Take care, guys. This is super valuable. Bye.